All right, guys, with equipment, we all know that it is depreciated. Okay, the fact that it is given to you as carrying value, I said, it makes it a little bit tricky, guys. This is the trickiest the purchase of tangible assets can be. All right, I had to start with the trickiest so that you find the rest of examples a bit easy. Obviously, we are given the carrying value at the beginning of the year, which is 2015, the 31st of July, it was 950. Carrying value on the 31st of July 2016, which is the closing amount. It is 1,232,850. So you can't just take last year's carrying value and minus this year's carrying value and hope to find the cost price of the equipment that was purchased. All right. Note that we are also given depreciation, guys. Remember, depreciation reduces the carrying value. I will also send last year's slides of assets disposals just for some of you guys to remind yourselves of asset disposals, because if you can't get asset disposals, it'll be a bit difficult for you to understand what I'm currently doing. Okay, I'll send the videos shortly, immediately after this lesson. I'm gonna pass the slide a bit and go to the next slide. In the next slide, guys, we are told that the business bought new equipment. Please note that new equipment will always be at cost price, which is what we are looking for. When they say bought, guys, bought means that money is going out. Okay, bought means that money is going out. Bought means money is going out. It means that we bought equipment, so we had a cash outflow, red outflow, red outflow. Okay, they also disposed of an obsolete equipment on the 31st of March 2016. The following information relating to the disposal of this equipment was taken from the tangible asset register. They gave us the cost price of equipment, accumulated depreciation of equipment on the 1st of August 2015. Note that the 1st of August 2015 was the beginning of the financial year. So they gave you accumulated depreciation at the beginning of the financial year. They also told you that depreciation was calculated at 15% per annum on diminution balance method. You already know that when they talk about diminution balance method, the first thing that comes to mind, guys, is that you need to first find the carrying value at the beginning of the financial year. In this case, for you to find the carrying value at the beginning of the financial year, you will simply take 180,000 minus 87,500. Okay, I'm going to quickly move to the next slide. Guys, if tangible assets values given in the statement of financial position are at carrying value, you'll realize that the amounts given for equipment were at carrying value. All right. All amounts that come into the following calculation note must be at carrying value, since the amounts in the statement of financial position are at carrying value. Everything that comes into this note must be at carrying value, except for depreciation. In this example, amounts given in the statement of financial positions are at carrying value. And this is the note. I did specify you will start with balance at the beginning of the year. Balance at the beginning of the year at carrying value was 950,000 rand, 950,000 rand. Remember, we're just looking at equipment. We have already done the one for fixed assets. We are trying to figure out whether equipment resulted in a cash outflow and if it resulted in a cash inflow. We were told in the previous slide that we disposed of equipment which was obsolete, and that presents a problem, guys, because it simply means that that equipment was not sold because it was obsolete, meaning that they just got rid of it. We don't have that. Okay, we don't have additions at cost in this case. Hence I use that value. We have disposals at carrying value. The problem is, guys, in this example, they gave us the carrying value of the asset. They gave us the cost price of the asset and the accumulated depreciation of the asset on the 1st of August, which is the beginning of the year. But we need the carrying value of the asset that was sold at the date it was sold. So we need the carrying value on the 31st of March, if I'm not mistaken, 2016. That was when this equipment was sold. For now, guys, I'm going to put a question mark there because I don't have the carrying value of the equipment that was disposed. And then we're going to have current year depreciation. Current year depreciation, we're going to take it from the income statement. It reduces the carrying value. And lastly, we're going to have balance at the end of the year, and the balance at the end of the year, it's 1,232,850. This comes straight from the statement of financial position. Shortly, guys, we're going to be calculating the carrying value as well as additions at cost.